So how much will my monthly payment increase with this increase in recent mortgage interest rates? And how much difference will it make with the future anticipated increase in mortgage interest rates? These are some of the questions being asked by many people these days. So in this episode, I'm going to answer these questions to clarify any doubts so that you can make a well-informed home buying decisions. Hi, this is Manoj Arora, broker owner of Ace Team Realty here in Mississauga, and welcome to this episode of Manoj Arora Real Estate Show. As you know, Bank of Canada recently increased the overnight lending rate by a quarter percentage point, that's 25 basis point, after lying so low for almost 2 years due to the pandemic. So how is this affecting the mortgage monthly payments? So to simplify the explanation, I'm making some assumptions here. So let's say you're buying a property worth $1 million and you're putting 20% down, that's $200,000, and you choose a variable rate mortgage and with an amortization of 30 years. So with this purchase price of $1 million, so with this $200K down payment, the principal loan will be around $800K. The variable interest rate has been hovering around 1.35% prior to this recent interest rate hike. So let's say this chart represents here the total payment, the money you have to pay based on 1.35% on 800K principal loan prior to the increase. So with this interest rate, your monthly mortgage payment would be around $2702. Now with this 0.25% rate increase, your effective interest rate would become 1.60, which should increase your monthly payment by around $95 to approximately $27.97 per month. Now, will this $95 a month make a big dent in your pocket? Probably not, unless you've already stretched yourself with payment of $2,700 to begin with. Now, the second part of the question is, how will the future interest rate increase affecting your monthly payment? So for this exercise, I'm assuming 2 more interest rate hikes of 25 basis points each in the coming months. So another increase of interest rate will make the variable interest rate at 1.85%, and with this interest rate the monthly payment will increase by another $98 or so, making a total increase from the pre-increase level by $193 to a total monthly payment of $2,895. And a further increase of 25 basis points in interest rate will bring the effective variable mortgage rate to 2.10%. Still a cheap money from any standards. Anyway, this 2.10 interest will further increase the monthly payments by another $98, making a total increase from the pre-increase level by $291 to a total monthly payment of $2,993. So keep this in mind, especially if you are currently in the market to buy a property, because these interest rate increases are bound to come by unless some major or health issues surface. Although, also keep in mind the banks, when approving mortgages, are qualifying you at a higher interest rate of 5.25%, which means that you should still be able to afford this property even if the interest rate is as high as 5.25%. So 2.10 is still should be okay based on your pre-qualification. So let's look at this from another angle. So let's say that your maximum monthly budget is $2,700, which you were getting from a pre-increase variable interest rate of 1.35%, and assuming that you're still putting $200,000 down and amortization you're picking up 30 years, And with this interest rate of 1.35%, you were able to purchase a property of $1 million prior to increase in this recent mortgage rates. And now with this increase of 0.25%, the current interest rate has become 1.60%. And now instead of $1 million, you can now purchase a property worth only $975,000, reducing your purchasing power by $25,000 to meet your monthly budget of $2,700. So let's talk about future expected interest rate increases. So let's say the next interest rate increase is again 25 basis points. So your variable mortgage interest rate will become 1.85%, which will further reduce your buying power to a maximum of $950,000. And one more future increase of 25 basis points will make your effective interest rate to 2.10%, with which the maximum you can buy a property is worth $925,000. So what does that mean? That means that at that time when the interest rate goes as high as 2.10%, either the same property should come down in value from $1 million to $925,000, or you'll have to look at a different kind of property or at a different location. And it will all depend on how the market behaves with each increase. If more homes come up for sale and inventory increases, we may see a pullback in prices, and so you might still be able to buy the similar property at a lower price. Now we are seeing a little increase in availability homes, but the numbers are still keeping us in a strong seller's market. No doubt that the number of offers are reducing on the offer day. So now, if we continue with this low inventory and there is not much pullback in prices, then with this reduced buying power, you may have to consider a different kind of property. If you're looking for, say, at a semi-detached in 1 million range, you may consider buying a townhouse. And if you were looking to buy a freehold townhouse for $1 million in your marketplace prior to the increase in interest rate, now you may consider looking at a condo townhouse, or you may have to consider looking at the areas which are a bit far from where you were looking to buy to begin with. So hope this helps. I have shown you both the calculations, i.e. increase in monthly payments with every increase of interest rate, as well as the buying power if you don't want to increase your monthly payment, how your buying power will reduce. So please comment below what your thoughts are. Would love to hear from you. Does it make sense? And if this episode resonates with you, please do give a thumbs up and do subscribe to my channel and do press the bell icon so you get notified whenever we upload our next episode. So this is all for this episode. This is Manoj Arora signing off. Take care till next time. You were watching Manoj Arora Real Estate Show.